to this webinar that I will be presenting along with the team from TreasuryONE. My name is the Finance Ghost, as you've probably worked out by now. Really interesting to note how many registrations we've had for this webinar. Clearly, the word immigration continues to be just as emotive now as it has been in prior years. So the format we'll be following today is I'll be speaking to this objective framework that I wrote actually on the concept of immigration when I first started the Finance Ghost as a business, which was in 2020. I'm about 3 and a bit years in now. And I didn't think it was going to do as well as it did. And then when Ghost Mail started to become a much bigger publication, I pushed the article again. I was just looking now on the website. This thing got to almost 36,000 views. So for whatever reason, this framework did basically go viral, which is obviously, kind of cool. And it hopefully will be as useful to you attending this webinar as to those who have read it before. And as always, there's going to be a Q&A at the end as well. I'm obviously happy to take questions on the topic of immigration and how I think about it, think about the future in South Africa. I would request that we, don't allow it to degenerate into a very political debate. I just don't want to go there. I think it just creates too much noise around the decision. And then on the call as well today is Dylan Griffiths. He's a Forex dealer at TreasuryONE. He knows the exchange control side of things inside out. So you've really got the full circle here. I'm here to basically just put forward some objective analysis around whether or not immigration makes sense. And for those who are looking to take that route, or might I add, to financially immigrate, which is something different to physically immigrating, you've got Dylan on the call here who will talk to some of these concepts and will be here for the Q&A at the end as well. So with that out of the way, I think let's get into it. I must say before we start, it's been quite nice to have so much electricity. I actually ran out of prepaid electricity this morning, which is a blessing these days in South Africa, as we well know. So it's quite nice to actually use Eskom's power. I don't have a backup myself, so there's a lot of time spent in the dark. Sometimes I actually use my cell phone light, just to avoid the trauma of switching on the light switch. And I think that trauma is exactly why so many people have registered for this today. So I'm actually looking at the article I wrote back in April 2022, and I want to read to you, and this was the refresh of this thing. The original publication date was July the 26th, 2020. So almost 2 years later, I refreshed it, and I actually want to read to you the first 3 paragraphs, because the one thing about South Africa is the more things change, the more they stay the same. So this is what they said. Is there a more emotive topic for the South African middle class than immigration? With just enough money to contemplate the decision, but nowhere near enough for the dream lifestyle of chasing the sun, these in-betweeners face a tough decision. Load shedding doesn't make it any easier. The damage to our economy from COVID was severe. It made the 2009 global financial crisis look tame. A significant upswing in commodities in the aftermath of the pandemic has saved the currency, famous last words, and quite possibly our economy as well, although Eskom and numerous other problems constantly remind us that the pain is far from over. And that proved to be correct. And the final paragraph there, when a ship is battling a terrible storm, the passengers look to the captain and leadership team for hope. Our leadership team isn't inspiring confidence in anyone right now, forcing the passengers to at least consider whether the lifeboats might be a better option. April 2022, here we are, June 2023, nothing changes, right? Literally nothing changes. The same stuff that bothers all of us continues to bother us. Some may argue it gets worse. I think obviously load shedding, we can see the numbers, that has gotten worse. And certainly the rand has gotten a lot worse. I think the geopolitical noise around South Africa has deteriorated. I sometimes laugh at how the narrative then just follows that. Yesterday was a buzz with stories of how we've supposedly lost the Formula One race because of our ties with Russia. I mean, if you watch Formula One and you know which countries are on the calendar, you will realize that Formula One is not exactly the geopolitical A team on a good day. I somehow doubt that is actually the reason why we lost the Grand Prix. But unfortunately, once this narrative starts, it's really hard to stop it. So Dylan, I'm going to ask you to go to the next slide for me. So the point here is this is not an essay bashing session. I absolutely believe that there is still opportunity in this place, without a doubt. South Africa is still a large and important emerging market. There's no two ways around it. We may not like it at times, but we are still part of BRICS. We are still a meaningful economy. We are important enough, that the US considers its foreign relations with us to be relevant. So I don't believe it's actually correct to say, oh, it's all over in South Africa. There's no point. There's no future. people get into that very dark space where they start to speak in absolutes. And that is when it gets very dangerous. That is when objective analysis tends to fall over. I would rather look at it and say, yes, it's difficult, but with the right strategies, there's definitely still opportunity. I can tell you for sure, there is a 0% chance I could have built the Finance Ghost in the last 3 years anywhere else in the world. One, because I don't know the market there and I don't understand what resonates with people and how to make them laugh. But two, there's just wide open gaps in South Africa that don't necessarily exist in places like the UK or in the Netherlands or the US. Yes, there's opportunity there. There's always opportunity. But in South Africa, it feels to me like there's still a lot of opportunity. So with that out of the way, I'm going to take you through this decision process that I think will help you, or I hope will help you in making this decision. I think, Dylan, if we can go to the next one. So here's the first test for me. You either can or you cannot live with the risk of crime. It's as simple as that. The risk is not zero anywhere in the world. If you go walking on a dark street in the wrong part of New York late at night, you are probably not going to make it home. This is a reality. South Africa did not invent all these awful violent crimes. We might be able to argue that we perfected a lot of them. And I'm definitely not downplaying the crime risk, far from it. I'm making it right up front. And in my experience, and I'm someone who semi-grated from Joburg to Cape Town about probably 8 years ago now. In my experience, when you can no longer live with the crime risk and you feel like you can no longer mitigate it for your family's safety, that is the point at which you need to make a change in your life. And it's a very, very personal decision, and everyone feels differently about this. So, for example, some people are completely fine with living in a standalone house. They have armed response, they have a big wall, and that's fine. Others are only prepared to live in a complex. Others still are not even prepared to do Gauteng anymore, or Joburg at least. You know, it's a very, very personal decision. And for me, the decision tree is very straightforward. If you believe that you cannot live with the crime risk in South Africa at all, then you can drop off this webinar now because you're wasting your time. You should be on visa sites. Well, you should stay to listen to Dylan, actually, is what you should do, because you clearly are ready to go. But you get the point. At that point in time, it's time to leave. There is a 0% chance you are going to be happy if you cannot get your head around crime in South Africa and how to mitigate it or not, as the case may be. I do think there's a middle ground, and I'm the biggest proponent of semigration in the world. Specifically, I think if you're in Gauteng and you're full and you're done, I think you will find that Cape Town in particular, and I can only speak to Cape Town from personal experience, you know, despite all the noise you'll see and all the political up and down and fighting and this and that, the reality is I have found that it is a lot safer down here, and I have found that it is a better quality of life. If you say that on Twitter, everyone will quote crime stats from the worst part of Mitchell's Plain and compare that to Joburg as a whole and say, how can you say that? The Western Cape still has crime. Yes, the Western Cape still has crime. But this is the kind of narrative that drives terrible decision-making. I don't go to the middle of Mitchell's Plain. So the crime rate in the middle of Mitchell's Plain, I am lucky enough that it doesn't directly affect me in the same way I would never go to the Joburg CBD. So, you know, the way to assess this is to look objectively at how the statistics apply to you. That is just the reality. If you're lucky enough to not be in some of these situations, then you don't necessarily get directly affected by them. And to be honest, if immigration is even an option for you, chances are good that you have the financial means to not be dealing with the worst areas that South Africa has to offer. And of course, if you can live with the crime risk where you are already, then great. You know, you don't necessarily need to run away from a physical perspective, from a crime perspective. You can pretty much pick anywhere in the country, wherever your favorite place is to live, and you can stick it through. I think we can go to the next one, Dylan. So the second test for me is, can you financially diversify? So there's this old joke that, you know, you want to live in the sunshine and you want your money to live in the cold, where it is supposedly safe. Now, there's some truth in that. I think often the cold gets too much credit here because it doesn't always offer half decent returns. Interestingly enough, that situation has changed in the last year and a half, particularly with interest rates going up so much in places like the UK. You know, we've seen a lot of examples of really interesting investment opportunities where actually, if you want to create this little nest egg offshore, it can sit and compound at a pretty decent low risk investment rate. And that can just be your nest egg. That can be your, okay, I feel better fund. Every time I flick my light switch and it doesn't work, at least I know that I've got a decent amount of money saved up overseas, and, you know, that helps me sleep at night. That is an important point, and that really does help people. I would also point out, and Dylan is the expert on this, definitely not me, but South Africans, up until recent changes, were allowed to take R1 million offshore every year with almost no paperwork and another 10 million with some hoops to be jumped through. I do understand that this changed recently, and maybe Dylan will speak to some of that, but the reality is you can still get up to, I think it's 11 million rand a year out of South Africa, provided you follow the paperwork. Now, most people don't need to worry. 11 million rand a year is a lot of money. If you decide in 3 years' time you're done with this place and you want to immigrate, chances are very good you can take most of your money out in the first year and maybe what's left in the second year. This is very much a world-class problem. If you sit at night and your biggest worry in life is, oh no, I'm worth R500 million, how will I ever get it out of South Africa? You are dealing with a different set of problems to everyone else. It is very much a financial issue, and there are lots and lots of high-end wealth management firms who can help you make that decision. I think for most South Africans, they are thinking about, okay, what do I do with my pension? How do I get it out? When can I take it out? And will I still be able to get it out? Generally speaking, you can. Obviously, if South Africa completely blows up and we go full on Zimbabwe mode or pick any other hyperinflation economy where the rand literally goes to zero practically overnight, then that is where the diversification is important. But it is worth remembering you can achieve a lot of that global diversification without physically taking your money out of the country or dollarizing it, as people will often say. You can go that route, but you can also invest in stuff right here in South Africa that references global assets. And in many cases, that is actually a cheaper alternative because you're not getting hit on the costs of taking your money out of the country. So that is something to just think about. That is the financial decision. So Dylan, if we can go to the next slide. Okay, so now we get to what I think is the hardest decision out of everything, which is the decision to physically immigrate or not. It is one thing taking your money away from your parents and your family. It is another thing entirely taking your gorgeous little 4-year-old and packing for Perth and realizing that no matter how many promises everyone makes each other, chances are that child will see his or her grandparents maybe 4 more times in their lifetime. Like, let's be blunt. It's a big, big, big decision. And that's why it is so emotive. And that's why it is so difficult for all of us when we have a look at this assessment. So knowing how difficult this is, I looked at this and thought, okay, what is a framework for whether or not it makes sense to actually immigrate or not? And what you'll see on the right-hand side there is what management consultants, which I wasn't in a previous life, but I did work in some strategy teams, will classically call a 2x2. If you follow Gartner, which ranks businesses based on where they are in a market, they call it their magic quadrants. But the reality is it's literally just these 4 quadrants, and each quadrant is a different decision based on where something is on the x-axis or the y-axis. So as you can see here on the y-axis, we're dealing with proximity to family. In my mind, that is very different for different people. And this is not there's no room here to judge people or say that one answer is right and one answer is wrong and having kids is the only way and not having kids. There's no room for that. Everyone makes their own decisions in their lives. For some people, all they want to do is qualify, disappear, go travel Thailand for 3 years, and then disappear somewhere in Spain and phone their parents once every 4 weeks. There's nothing wrong with that if that makes everyone happy. Family proximity is not that important to that person. At the other end of the spectrum, we have people who tend to still live in the same suburb they grew up in for the rest of their lives. Family proximity is everything in their lives. Now, obviously for them, immigration is a very, very different decision to someone for whom proximity is less important. On the other axis on this quadrant, we basically have your income prospects. Now, again, what this requires, in my opinion, is an objective assessment of what can you earn in South Africa. It's as simple as that. Some professions are very well paid in South Africa and have excellent prospects compared to others offshore. In other cases, you do far better offshore in relative terms than here. So teachers, for example, tend to do better offshore in relative terms than they do in South Africa. But scarce skills like finance professionals, etc., generally speaking, do better here than they do overseas. I'm a chartered accountant. I have a lot of friends who have immigrated. The majority of them are still working in audit firms wherever they are in the world. Again, there's nothing wrong with that necessarily, but just be aware that if you're going to make that decision to immigrate, chances are very good you're going to have to fall into a really big corporate as a sort of sausage machine and not necessarily the kind of work you'd want to be doing in South Africa. You'll have to excuse my cat. He has a lot of opinions on this as well, and he's decided to share all of them with us today. So the point here is, if you read where you are on each of those quadrants, the top section means family proximity is more important to you. Now you have to think about, okay, what are my income prospects? Let's start top left. If I have weak income prospects, but family proximity means a lot to me, then I'm going to need to upskill or change my job. That is what I'm going to have to do, because I can't earn well here, but I want to stay here. There's no point in continuing then to just bash down the wrong doors. You need to take a long, hard look at this and decide what you can do differently to stay in South Africa. Top right is an easy do not immigrate decision. Now, again, this is once you've already decided, okay, I can live with the crime. Remember, that's important. I can financially diversify. That's important. This is physical immigration. If you want to be close to your family and you have strong income prospects in South Africa, I would say don't immigrate. The chances of you being happier somewhere else in the world than here, not great, honestly. If we then go bottom left, this is a scenario where immigration is the easy choice. You have weak income prospects and family proximity is not terribly important to you. You're a school teacher, you don't get on with your family, you want to go and explore the world, off you go. Why not? You are more likely to be happy overseas than you are here. And bottom right, that's where family proximity is not very important to you. And you can earn well here, but that means you might be able to earn well elsewhere. So if the travel bug is biting and you want to go and explore other things, you could consider entering that global job market. So the point I make here is each quadrant is actually different. And that's why I absolutely believe that immigration is not a right or wrong answer. It is a very, very personal piece of analysis that you need to do. And I think it's something you need to do every few years, actually. And, you know, the problem is this is such an emotive debate that inevitably around the braai, you know, the arguments will start. And there's always someone with an exceptionally strong opinion on this, you know, oh, you're an idiot. How can you stay in South Africa? Can you see this place? It's going to the dogs. You know, it's gone. And absolutism like that helps absolutely no one. Equally, someone who just, you know, sticks their head in the ground and says, no, it's all going to be okay. And also, have you seen the Springboks? Like that also doesn't help. You know, you need to be willing to actually take an objective view on these things. So Dylan, if you wouldn't mind going to the last of my slides, and then I'm going to take a break and hand over to you. So the one thing I would also strongly caution is just be careful of confirmation bias. So when I did the slide, I decided to look for pictures of a very proud Canadian, Australian, and someone in the UK. And this has been my experience. I can't speak for you, obviously, but I often find when friends immigrate, they often see only the absolute best in that country and none of the bad. And Facebook and everything is literally spammed with all of the great things you could possibly imagine about that business, or rather about that country. But they never ever say, you know what, actually the reality is that I now live in a flat the size of a shoebox. And actually I miss home and I really miss having someone to help me around the house. And I especially miss my parents being able to babysit the kids, because actually as much as it's lovely to be in this great city, there's no support base for me here. You know, it's not always this land of milk and honey. It just isn't. So the reason you need to be careful of confirmation bias specifically, this is a cognitive bias where we look for reasons why our decision was the right one. If you've picked up your whole family and you've taken them overseas and you've gone through all those emotions and all those difficulties and all the pain, because make no mistake, there is pain, then you are going to look for every single opportunity to confirm that you made the right choice. You will literally cherry pick negative South African news, and you will cherry pick the best of your overseas life, and you will combine the two to convince yourself that you made the right decision. Again, there's no judgment here. I get it, because this is a very horrible thing. But when you are sitting in South Africa, just be very careful of the highlights reel being fed to you from your friends offshore. They don't tell you about the bad stuff. They only tell you about the great stuff. And I promise you that every country in the world has issues. It absolutely has issues. So I think that's it from me. Dylan, I'm going to hand over to you now and take a little break. And then I see some questions coming through. Keep them coming through. I'll try to answer as many as I can. Obviously, a lot of this is very personal and some of it is quite sector specific. I think just having the conversation is a good thing. But Dylan, I think let's learn from you now about the actual Forex stuff.
Thank you, Ghost. I think that was very informative. Thank you, everyone, for allowing me the opportunity to talk a little bit about the offshore process today. And I hope this information that I share with you will provide some clarity and perhaps touch on some things that will help you in your future decisions. So to get started, firstly, there are two main categories when individuals request offshore transfers. mainly residents and non-residents. This is important because the SARB sees SA residents as needing to adhere to specific regulation when moving capital funds. As a resident of South Africa, you have annual limits, the 1 million allowance, that SDA that you all know about. Within that, there's various things or aspects. So you have your SDA, and you need to use it for gifting, for travel, for offshore card purposes, as well as investments. All of these are part of the same 1 million limit. So for instance, if you spend 100,000 on gifts, 100,000 on travel, and 50,000 on Amazon, say, then you only have 750,000 remaining. And if you use this on your SDA, you can then either do your offshore investments with it or transfer to your own offshore account. If you exceed this amount, you then need tax clearance. I'll talk more about this in a little bit more detail later. And it's also now, as Ghost said, it's now known as application for international transfer. As for non-residents, they simply need to prove their funds belonging to them, and then they may move the funds abroad as needed. Also note that South African residents do not automatically lose residency when leaving SA, even if they have no intention of returning, and even if they're away for several years. Becoming a non-tax resident is a formal process that you go through now with SARS, and previously it was with the Reserve Bank. It's important to be aware of some of the rules around the South African Reserve Bank when considering the transfer funds offshore. For example, you cannot transfer capital funds to an individual third party, but there are exceptions, such as you can transfer your single discretionary allowance to a non-res or resident if you can prove, in the case of a non-res, that the funds are for investment, such as property. In the case of a resident, sending funds as a gift, but you also need to then prove that the resident resides offshore. I think this is especially helpful, or understanding these rules is helpful in situations where you don't necessarily have an offshore transactional account yet. Your allowance limits is the 1 million per calendar year under the single discretionary allowance. And then further to this, you have another 10 million, which you need SARS approval for. You can also then go higher than this, but further to that, you'll then need Reserve Bank approval as well. Additionally, South African residents, or a South African resident, is also not allowed to transfer their offshore assets to another South African resident. So essentially, this means your offshore assets and funds must remain under your own ownership. If you do want to transfer them to your spouse, child, other family members, you need to then bring the funds back to SA, give them to said individual, and then transfer it on that person's allowance. Alternatively, there is ways of registering with the SARB an application where you do the transfer of ownership without necessarily bringing it back. Now, if you were not aware of this simple regulation, you can see how you could easily and accidentally contravene SARB regulations. There's also some useful tips in understanding the exchange control, and not always widely known or understood. One such strategy is funds in, funds out. This is basically means that when you disinvest from offshore funds, you can reinvest at any time, provided that you can prove the offshore flow. So if you had used your 1 million over a course of 10 years, and then you and your wife together had done 20 million, if you needed to bring that down for whatever reasons, and you hold on to that notification of where you converted and brought your funds in, should you later then need to take out the funds, and especially with the new, more complicated tax clearance process, you wouldn't need to get another tax clearance. You could then utilize these funds that you had brought back and take them out again under that same registration, and obviously without getting tax clearance. As you can see, the process and regulations around exchange control matters can be quite complicated, and it's crucial to get them right. So we strongly recommend reaching out to professionals who understand the regulations set by the Reserve Bank and can provide accurate information around this. It's important to note that these SARB regulations is separate from those of SARS. So whilst the tax consultant can guide you through the local tax regulations and procedures, the process of moving funds offshore, according to the SARB, may require a different approach in terms of reporting your transfer. In addition to the complexities of obtaining the correct information and ensuring accurate reporting, there are potential costs associated with such transactions, and it can add up really quickly. By using an outsourcer like TreasuryONE, you can access top-tier pricing typically reserved for large corporations. And how this works is, since the bank sees TreasuryONE and deals directly with TreasuryONE instead of an individual with a once-off transfer, they offer TreasuryONE the best pricing based on our volumes and continuous transactions. So this means we can then provide corporate foreign exchange rates to private individuals. And if you have the time, we can offer valuable market insights, daily updates, and help you better make decisions around the timing of when you execute these transactions. You also have dedicated dealer or access to a dedicated foreign exchange dealer that you can call and ask questions at any time. And the last point that I'd like to lightly touch on are the tax clearances process, which is now called the application for international transfer. In the event that you do need to obtain such a tax clearance, the process has been changed and is more detailed than previous tax clearance applications. It requires in-depth information and understanding and proof of both local and offshore assets. SARS may also verify this information, and since the application submission is electronic, this information you provide will be stored forever. If they then decide to later check if there's any inaccuracies or maybe they suspect dishonesty, they could pull up severe consequences for this. Due to the complexities and legal implications of this new process, we have decided to partner with a tax consulting firm that specializes in this area. This allows our clients to access the best and correct professional advice and services around such tax affairs. We do not recommend that you do this on your own anymore. When in the past, the applications were very straightforward and could easily be submitted on the e-filing platform on your own, the process has changed significantly and carries a lot more responsibility. SARS also has full view of all your accounts via the International Information Sharing System, or CRS, and we should always work under the assumption that they can and may review your accounts if there's any suspicious transactions or discrepancies. If you're more interested in more about this, or about the application for international transfer, we're going to be hosting an information session going into depth of what's required and such things around the 27th of May. So feel free to get in contact with us should you be interested. Thank you for your time, and I'll now hand over back to the Ghost.
Thank you, Dylan. So yeah, as expected in South Africa, lots of red tape, and I think it's important to just use people to guide you through it, because it can be a horrible outcome if you get it wrong ultimately. So some interesting questions have come through. I'll answer the ones that have come through thus far, and then we'll see if there's any more. So right up at the top, I knew this would come up. Dear Ghost, what about the risk of having offshore assets frozen due to our Russian friends? Yes, unfortunately, large geopolitical risk like that is never zero, but I will point out to you that Russia literally had to invade another country in order to achieve that outcome. I think if you look at the aftermath of our little spat with the US, it feels to me like it's a very remote risk that it would be as extreme as having offshore assets frozen. I don't think that most countries would go and freeze stuff just because of an association, or because we happen to all be in BRICS, for example. South Africa is actually still a pretty important economy. We are an important exporter of a whole bunch of commodities that people need. There's a lot of just posturing and politics at the moment. And, the US is also not shy to create a narrative where it suits them. So I think, is the risk zero? No, the risk is not zero. The risk can never be zero. Can that risk be mitigated? Well, unless you can literally shed off your South African skin and emerge, from the water as something different in the next sort of year, I'm not sure it can be mitigated. It's one of those risks where it's one of those things we kind of just have to live with. And if it's something that worries you that much, then the process of immigrating and getting residence somewhere else would probably be the way to go. But that does not happen overnight unless you have the financial means to go and literally buy a residency somewhere else. And there are countries that do that. I'm no expert in that space whatsoever, but that is something you can investigate. There's a question here, my view on farming. If I own farms, would I sell them and financially diversify, or would I use the income of the farms, move the gains overseas? What would I diversify into? Look, it's obviously a super broad question. And I think, well, it's actually a super specific question with a very broad answer. And the broad answer is this: it doesn't matter what you own. You need to look at the risk and the return. So, for example, I recently went through a lot of personal change, and part of that involved selling a house and needing to find a place for myself. And I've decided to rent. And I've got to tell you, I'm in no hurry to buy, even in Cape Town, because unfortunately in South Africa, there is always the risk of decay in an area. It happens, you can blink and it's happened. So that can be everything from infrastructure falling over through to, open pieces of land that very quickly become informal settlements, and then it's very hard to get it sorted out. These are just realities of living in South Africa. So for me, the risk reward of owning property at the moment is difficult to justify, because you're putting basically all of your wealth into the ground in one area, which is the exact opposite of diversification. When it comes to businesses, I think just the same objective view on things is really helpful. Is this thing actually giving you a worthwhile return for the risk you are taking on? And some businesses are much riskier than others. Farming is always a lot riskier than owning an asset-light services company in South Africa. So for me, there's no hard and fast answer. I think having multiple sources of income is always a good idea. Always. If there's a way for you to take the money from the farms, don't go and invest it in another farming business in South Africa necessarily. Go and either, take it offshore, get it into diverse equities, whatever the case is, work with a wealth advisor to help you make those sort of decisions. Dylan, there's a question for you here, which is that tax clearance certificate, just to be sure, is it the normal tax clearance certificate that you can get online? So is the suggestion, go and actually use professional advice because it's easy to make mistakes, or is it something different to the one that we used to be able to get up or get online previously?
It's not the same. I think what they're asking about here is the tax clearance that you get in good standing. That, with regards to the Reserve Bank, means absolutely nothing. That's what you give someone to show that your tax affairs are in order. Even previously, we often got a lot of those. What you're looking for, or what you're looking for, was the financial investments tax clearance. And that was a process where you submit supporting documents, you state your local assets and liabilities for the last 3 years. We used to do, simple Excel sheets on that, and you give estimates. And sometimes it came back, but mostly those cleared within three days to, when SARS was under stress, maybe a month. The process now is this application for international transfer, and it is a lot more complicated, but what has us concerned is the legal part of it. I've just checked on e-filing. The questions that they ask there, it's no longer draw up an Excel. They ask you specifically about every asset and name it. And if you were to put a zero value there, having forgotten or something, I'm sure later they could come back and it could burn you. So no, it's not the same. And our opinion is get the right people for these kind of tax clearances now.
Thank you, Dylan. There's a question here about, if you send funds offshore through a South African service provider like Easy Equities when you live in South Africa, what happens to those funds if you immigrate from SA? Can you still hold them through the SA service provider? Can they be transferred to an offshore provider without having to sell and declare taxes? Look, from my side, I'm neither a tax advisor nor an ex-con advisor, and this is seriously complicated stuff. I obviously know a lot about it, but it's always in the detail. What I will say is this, is if you take your money out through something like Easy Equities, you're basically using up that offshore allowance. That money is now overseas. I am aware of someone who has had that money, because I think he did it as a test, paid out into an offshore bank account, and it worked. So the point is the money is out of the country and you can be paid into a foreign bank account, but just be very careful with tax. There is a difference between where the money is and where the taxes are payable. We work on a residency system in South Africa, and that means you can be sitting here in SA, you can make gains on an investment somewhere in the UK, and depending on the terms of the double tax agreement, you can end up paying tax here. And it's likely that you would end up paying some tax here. So just be very, very careful. People get this wrong a lot. They think that exchange control and SARS is all the same thing. I wish it was that simple. And it's another good reason why when you immigrate, you need to actually speak to the right sort of consultancies to make sure you're getting it right all the time.
If I could just
Dylan, jump in, please. Yeah.
I agree 100% that is offshore. So that would also be one of these hidden things where you're not even sure that it added to or took away from your 1 million allowance, and it's automatically allocated to that through your bank card when you're doing it. So watch out for that. And then the other thing is, you speak about immigrate. Now, if you go the formal immigration process, this will come up. I'm sure when you're dealing with your tax consultants at SARS, you're going to have to declare all your offshore assets, all your local assets, and I don't know what they base the price on. I'm sure that's, as you say, that's very along the lines of tax for tax consultants, but that's definitely something that I'm sure will come up. If you're not, as long as that's offshore and it hasn't rand denominated, I don't think that there's a gain to be declared on it yet. But should something happen, such as you passing away, I'm sure it's going to come up again.
Yeah, complicated stuff and lots of rules. There's another comment here. NHI question mark. Enough said, right? NHI. I think if that goes through, then the next version of this presentation will have a slide that says, can you live with the crime? Next, can you live with the health risk? Yes or no? Look, again, maybe I'm slightly more optimistic on some of this stuff. I tend to believe that a lot of this is still political posturing and populism, but honestly, who knows? Obviously, if the government manages to spectacularly break our healthcare, truly break our healthcare, then the immigration decision starts to look a lot different, I think, for a lot of people. But then we're starting to assume, in my view, a quite extreme outcome. I like to think as much as our government does manage to mess a lot of things up, there are just certain things where like their own constituency in many ways actually is worse off. And there are a lot of influential people sitting in government who would then suffer the same issues with their healthcare that people outside of government would suffer. So I try to view some of this as noise. And the way I do that is I basically just look at it and say, what am I doing with my own money, with my own business? Am I diversifying? Because if something like NHI happens or any of the other million things that can go wrong, do I then feel like, one, I have the skills to take offshore, and two, I have the funding to take offshore? There's another point here actually that I didn't talk to in the presentation, which is, when you speak to people overseas and they tell you what they earn and it's all fabulous when you convert it to rands, they forget to tell you what bread at the local shop costs. The reality is you need to look at what their net asset value is going up by every month. End of story. If it's going up by $1,000 a month and you're in South Africa and you're saving 20,000 Rand a month and you're investing it in something offshore, you are living by your family and you are going in exactly the same direction that they are financially. Literally, your NAV is going up by the same amount as theirs, just in a different currency. And if you flick it into the right investments, there is no difference. So it's the same thing with something like worrying about NHI. I look at it and say, what can I earn here? What would I be earning offshore? Am I building up that insurance policy? And if this place breaks, truly breaks, will I then be able to get out? Speaking of breaking, there's a question here around fair value for the US dollar and ZAR. I mean, honestly, who knows? Obviously, I think the Rand is oversold. TreasuryONE are the experts in the space, for sure they are, way more so than I will ever be. And I'm very grateful for the commentary they give us in Ghost Mail every morning. But for me, the Rand looks oversold at the moment. You can see it's actually come back off a bit. It was almost at $20 to the dollar. It has come back down again. If you go and draw yourself a very, very long-term chart of the Rand, you will see the trend is to weaken, which is unsurprising, but it likes to do it in shocks and then it comes back. So I like to believe the recent issue has been a shock and it's going to claw its way back. And I actually used the opportunity to take some profit on some US stocks and bring it back into Rands, which I realize is a very unusual thing to do. But you don't make money in the markets by doing exactly what everyone else is doing at any point in time. That is exactly the opposite way to make money in markets, actually. There's a question around pension and provident fund rules and regulations and lump sum payouts. How do we take pension funds out if lump sum payouts are limited? So I am 35 years old. I do not make a single pension contribution. I do not make a single RA contribution, and I have zero desire to change that. What you're talking to there is rules and regulations that basically restrict your access to money in exchange for tax benefits given to you over the years. One of the ways I sleep at night in South Africa is I have control over all my money. There's absolutely nothing tied up in formal retirement savings. Again, I'm no expert in that space. I'm not sure how you manage, getting that money out and lump sums. I have spoken to financial advisors before who have interesting ways to, move the money potentially into preservation funds that have different exposures. I'm no expert in that space, so I'm going to stop there. I would highly suggest speaking to a financial advisor and understanding what is actually possible in that space. Dylan, there's one for you. Could you provide any info on dual tax if you immigrate? Is that something that still exists within SARS, i.e. where you only pay tax in one country and not in SA?
Dual tax is still a thing. I think we have agreements with many countries. But because this is a tax question, I would suggest maybe attending the webinar that we're going to have. Sorry, guys, the date was June. But yeah, I suggest attending that because we have the right tax consultants there to answer these kind of questions, and they really know what they're talking about.
Yeah, there's a couple of tax questions here. There's one further down about tax if you have to withdraw and send your pension or RA offshore after immigrating. Again, I would say something like exit taxes, etc. Maybe attend, that TreasuryONE event and just see what you can pick up from there, and maybe you'll get a view on which consultancy you should chat to about this stuff. I'm very clear on not talking about things I don't know or understand, especially when it comes to tax on retirement. There is an entire sector of people who are experts in the space. I am not one of them. What I do agree with is a comment that the tax burden here is very unhelpful, especially with the lack of service delivery. Yes, I think we can probably all agree with that. There's a comment here about having 6 million rand to send offshore. Dylan, I don't know if you want to speak to this just at a high level. In your view, is it worth getting the tax clearance in one shot and getting it all out? Or do you split it out over 3 years? You send 2 million rand per year. Let's say it's split between spouses. I guess my understanding would be as soon as you breach that million rand, you're in the paperwork net anyway, right? There's no difference between sending out 3 or 10.
Yeah. So I agree, but I think what you need to look at here is what is your outlook and what is your turnaround that you want to get the funds out. So if you don't have any worries of going to STARS and doing all the paperwork, but not just that, if your assets and liabilities and everything that you declare is transparent and you have nothing to worry about, I don't think going through the process is a problem. I think when everything's not quite under the thumb and you're not sure, that if you go through an audit, it's going to be very painful. So 2 million rand, lots of people are doing that. If you're going to move 6 million, if 6 million is all you have, I would definitely suggest getting the tax clearance once off for everything, because that stays valid for a year and you can break it up into portions as opposed to doing 111 and going through the pain every time.
Okay, I think let's keep going. There's a question around which tax consultancy company you've partnered with. Dylan, I don't know if you're willing to talk to that now or if that's something that will come out when that webinar is available later on.
We joined with Tax Consulting SA. I don't think it's a secret. I think if you guys come to us for tax clearances, then we're going to walk you through it with them. So no, not a secret.
Then it's pros and cons of local and global diversification versus externalization of investments if not immigrating. Okay, so that's a big question. So I think what the question is basically, what are the sort of pros and cons of having your money sitting in SA referencing offshore investments versus actually taking the money out? I can tell you that the one difference is that if you want to go and buy single stocks overseas, you need to actually follow that allowance, take your money out and go and actually physically buy shares in something like Apple. You can't do that by keeping your money in South Africa. What you can do in South Africa is you can buy exchange traded funds that reference global assets. So one of my favorites, which is the biggest position in my tax-free savings account, is the S&P 500 Infosys, or could be called Infotech, forgive me, index. But basically the biggest holdings in it are Apple and Microsoft, which is not a bad combo to have in your tax-free savings. There's a perfect example of where you can, number one, take advantage of a tax-free savings account. Number two, effectively have exposure to these global assets that are doing really well, generally speaking, especially over the long term. Plus you're protected from the rand getting worse in that kind of investment. And your money never actually left South Africa. In fact, if you want to, you can flick it around in your tax-free savings account, which I do from time to time, where you take profit on one ETF and you go and buy something different. So it depends how actively or passively you want to manage your stuff. But if you're not immigrating, the main reason to take your money out of the country, other than just the safety net factor, is to go and buy assets that are not otherwise available by buying things on the JSE. That's the best explanation I can give around that. The question around the estimate of the tax, I think we've covered off to say we can't do that here, but that's something you need to either attend the specific webinar for that or speak to the tax consultancy company. I certainly can't do or answer that question at all. There's a question that I think might be for you, Dylan, which is if you earned fees in dollars, brought that money into South Africa, so converted it into ZAR, and then you later again want to take it out of South Africa, how does that affect your single discretionary allowance and the money in, money out principle? I know nothing about this principle, so I'm handing that over to you, Dylan, and I'm hoping you do.
Yeah, so unfortunately, that comes in. So no one will understand the codes that much, but it's called a 511 code when you do disinvestment. And when you take it out, you do 511 against it again. And those two are basically kind of netting each other off to no situation. So that's the funds in, funds out. Your inflow of, I'm assuming it's going to be under salary or funds earned like that. That's not the same. So that comes in, you do your taxes, then it's seen as your income here in SA. And I don't know if you know the regulation around that, but if you are based in SA, so feet in SA, when you're earning offshore funds, you have 30 days from when it becomes due to you to bring it back into SA. However, if you're sitting offshore when you're earning it, you can leave it there. So yeah, once that comes into SA under salary, no, it's part of your SA assets. It's not funds in, funds out. You'll need to do a tax clearance or use your 1 million SDA for that.
And then last question, which is just as well, because I think we're mostly out of time here. What factors should you take into consideration before you financially immigrate? Dylan, I think that's one more for you because it kind of speaks to, I suppose, the regulatory finality of actually formally financially immigrating.
You know, I don't know if it's right down my alley because I feel it's maybe advice that you want to speak to a financial advisor as well as a tax consultant and look at what you're trying to get out of it. I would assume that the main benefit that I've seen people doing that financially or formally immigrate, even previously when it was done with the Reserve Bank, is to not be bound to SA tax, but more than that is to have your RAs and everything liquidate. I speak under correction, but I think there's a 3-year waiting period now when you do it with the new system, even though you financially immigrated. And there's a whole bunch of different requirements that you need to meet. But yes, it liquidates your RA so that you essentially have no ties with SA anymore. You go to SARS, you declare all your assets, you get one big tax clearance for the net value of that, and it's goodbye SA.
Okay, there we go. Then all you'll be stuck with is that Telkom account that's impossible to cancel for the next 5 years. Just kidding. Guys, I think that's pretty much what we have time for today. I just want to say a big thanks to Dylan and to the TreasuryONE team for throwing their weight behind this idea. It was actually their idea that we kind of do something, around immigration. So thank you. I'm sorry we didn't quite get to all the questions. I see a couple more coming right at the death, but we are pretty much out of time. And yeah, just thank you for attending. Thank you for reading Ghostmail. Thank you for following the TreasuryONE team. As you know, TreasuryONE does the commentary every morning in Ghostmail around the macroeconomics, the Forex. It's really great. And this will be available on YouTube. If you took value from this, share it. Share it with your friends. Share it with your family. We're all facing this. All of us are facing this together. And I guess all we can do is try and make objective, intelligent decisions and ignore as much of the noise as we can. So good luck with that. And I hope to see you on the next TreasuryONE webinar. Thank you so much.
Thanks, guys. And Ghost, just if there's any more questions that you guys want to know about the stuff, you're welcome to pop us emails and we'll be happy to help. Thanks for all your time.